Welcome back, YouTube. So today I'm coming to you to let you know that we are still in the midst of the battle for how this regulation is going to play out over crypto. If you've been following my channel, you know that I mentioned this at the peak of the bull run. As soon as we went over $1 trillion valuation, I knew that the Fed was going to come in. And I'm not saying that I don't believe in regulation. I do believe we need some form of regulation, but some are pushing to have crypto banned altogether. And I know that they're going to push some strict forms of regulation in the name of safety. FTX kind of triggered it, but we have a lot of bankruptcies and stuff that went wrong last year that's kind of going to cause crypto to come under a lot of scrutiny when it comes down to regulation. We're going to get into some comments here, but I do want to play the audio here from just some notes here from Gary Gensler, chairman of the SEC, and of course some comments from Charlie Munger as well. But I'm going to play this clip here so that you guys can kind of catch up to speed. As soon as I put the audio on, let's see. All right.
Well, Securities and Exchange Commission Chairman Gary Gensler making waves again in the crypto space to bolster protections for customer assets. Gensler proposing changes to federal regulations to expand custody rules to include assets like crypto in efforts to protect consumers' assets should the advisor or custodian go bankrupt. Here are the details on this as Yahoo Finance's David Hollerith. David, more changes here coming from the SEC.
That's right. A bit of a change up after so many enforcement actions over the past couple of weeks. But this proposal in particular, it's got some nuance to it. But essentially, it extends a safeguarding rule to other assets. And in particular, the SEC in this proposal has mentioned crypto assets. And it applies to investment advisors, which include hedge funds, wealth managers, and other registered investment advisors that custody client funds. And it's asking them to hold those funds with a qualified custodian. It also requires, for the first time, that advisors and qualified custodians enter into a written agreement, which effectively helps guarantee that custodians are protecting client assets. So above all else, this is intended to prevent fraud. And, without a doubt, especially in crypto over the last year, thinking about FTX and a number of other bankruptcies, this makes a lot of sense. However, the big issue is that crypto custody can vary widely across the industry. And what a qualified crypto custodian isn't abundantly clear. Now, during the meeting, which is still going on, it's been noted that this would mean more compliance costs if the proposal became a new rule. And there would also be costs to custodians in meeting some of the obligations, obviously, if they to become a qualified custodian. Now, just going further, calling the rule part of a broader strategy of wishing complete jurisdiction over crypto into an existence, Commissioner Peirce highlighted that the proposal is saying that while she highlighted that while she thought the intent of the proposal was good, it could result in more costs on investors that ultimately would outweigh the benefits of the rule. Now, the issue also being addressed not addressed, but in this proposal that is being brought forth is that it's unclear whether or not regulated crypto firms that custody assets such as institutional programs run by major exchanges could meet these requirements. So the proposal, which comes after this series of enforcement actions, no doubt places more burden for regulation on crypto firms. And obviously that's something that is wanted for investors.
Okay, so this is, I'm going to pause it right there before I get into Charlie Munger. So we have a number of takes here. The first one is obviously that they are trying to define, this whole thing it's a lot of fluff. I can say fluff, but they were trying to see what category crypto will fall into. Is it a security? Who has jurisdiction over it? Whose responsibility is it to regulate? Whose responsibility is it to enforce? All that kind of good stuff. So that's one side of the debate. The other side is, this needs to be done because the security risk to consumers. So we can best serve the consumer by coming down on the people who ultimately are doing the transactions, which typically this is a stock market solution, basically. And this is one of the things that I mentioned in my FedCoin video was if we're not careful and are active in the rollout of these regulations, we're going to get a mirror image of the stock market. And we know what typically happens to assets that are not favored by institutions in the stock market. You start seeing all kinds of manipulation and BS to control the price, stop movements, and stuff like that. So if we're looking truly to stay true to decentralized, we're going to have to be careful about these regulations. My biggest issues with any other markets, obviously shorting. I won't get into it in this video, but I do believe that there should be some regulations on that end. And if they are going to treat it better than the stock market, where they have to have X amount of the actual coins in a separate account versus the IOU swaps that they do in the stock market, that'll be a win in my book. But we'll see how that plays out. The other factor is there's a growing number of people who do not want crypto to even be allowed, or just pretty much ban it altogether. Charlie Munger is one of them. Very famous investor. He's like 99 years old, but very well known. Has been respected over the decades. Let's see, I'm just going to read from here. It says, in Munger's view, traditional currencies have helped turn man from a successful ape to successful human. He said during the Daily Journal shareholder meeting in Los Angeles on Wednesday. Munger said claims cryptocurrency can replace national currencies are the equivalent of saying that air can be replaced. Basically saying that we shouldn't be trading in crypto at all, and it's risky. But let's get in here. It says, this is quote, "It isn't even slightly stupid. It's massively stupid. And of course, it's very dangerous. And of course, the governments were totally wrong to permit it," Munger told CNBC's Becky Quick during a live stream event. "And of course, I'm not proud of my country for allowing this crap. Well, I call it crypto shit. It's worthless. It's crazy. It's not good. It'll do nothing but harm. It's antisocial to allow it. I think the people that oppose my position are idiots," the 99-year-old Munger said when asked about the recent Open Wall Street Journal call for a ban on an asset class. And so I don't think there is a rational argument against my position. Munger, who has drawn criticism for praising the Chinese government in the past, said that nations' leaders were right not to allow cryptocurrencies. The People Bank of China banned all cryptocurrency transactions in September 2021. This is Munger here next to Warren Buffett. This is Warren Buffett here on the left. This is Charlie Munger here. Let's see. You ought to be able to state a loss of issues. How big should the social safety net be? That's a place where reasonable minds can disagree, and you should be able to state that the case on the other side about it as well as the case you believe in. But when you're dealing with something as awful as crypto shit, it is unspeakable, he added. I'm ashamed of my country that so many people believe in this kind of crap and the government allows it to exist. So I won't get into any of the other stuff, but he's taking a very strong standpoint against pretty much having crypto be erased from the conversation. And this is one of the points that I mentioned in my video when I was going over like the Fed coin and stuff like that, because I do believe that within the next 24 months, we're going to have a Fed coin that's going to be marketed and pushed out to be used as the preferred crypto method. I don't think they're going to do away with crypto. I think that they're certainly going to put a hat in the race. And they've done this with gold and silver and stuff like that. And anything that we've considered money really in the past. There is some form of regulation, but they never went as far as to ban it altogether. Except obviously when there was like the Great Depression with precious metals. But since then, they pretty much put their hat in the race by saying that Like for gold and silver, since it's been historically like a form of money, they didn't say that it was illegal to own gold and silver anymore, but they said that they started minting their own. The U.S. Mint, they started minting silver eagles, gold eagles, and stuff like that. And it didn't necessarily hurt people from trading bullion and coins, but they marketed saying that, okay, well, this coin is minted by the US Mint. It is legal tender. They put all the little fancy fat stuff on there. It's legal tender. It has to be, accepted, backed by the United States government, all that kind of stuff like that. And so people typically gravitate toward that because it has the seal of the government on it versus, a local mint like Silvertown or JM Bullion or something like that. And so it makes them feel comfortable. So I do think that's kind of like the angle that they're going to take on there, and to kind of push their own coin out there so that they have at least a large part of the market share that any crypto, whether that be Bitcoin, Doge, whatever, Ethereum, Cardano, whatever you're invested in, so that it's not necessarily competing with the dollar. You're not circumventing it altogether, because that's the last thing that they want for a number of reasons. We can get into reserve policies and stuff like that, and how that would be absolutely disastrous for the country if people stop trading in dollars on any note, even based off of our current inflation. But they are certainly going to put some regulations in there as far as for who can hold it, how much, tracking taxes, all that kind of good stuff. And of course, they'll do it in the name of protecting the consumer, quote unquote, us. But this is happening. This is going to happen, in my opinion. And I believe this is going to get a more aggressive standpoint around this, especially if we see, because the conversation sparked up, I want to say a couple of years ago. They were saying that, what if it's like terrorism being paid with this here, or what happens when the cartel starts, exchanging money in Bitcoin? How do we control that? How do we stop that? How do we regulate that? And the way that they're going to do it, and this is one of the reasons why decentralized, and this is one of the reasons everyone needs to own their own wallets. I use Ledger. I have a link in the description section if you need to have your own wallet. But this is one of the ways that they crack down, is they control a lot of the distributors, which is like we saw in the video. They said that they're going to go after hedge funds and the exchanges and stuff like that. So that way they can cut you off there. It's kind of like being at imagine the hedge fund or the exchange being like the bank, and they don't like you, or something happened and they feel the need to restrict you. How they can flip a switch at the bank and freeze all of your accounts, and you're technically broke. You only have control of what you have in your hand. So this is why they're going to go after them, so that they can you can trade in your coins all you want, but they can still kind of control and push the buttons on the other side, which is, I cannot stress enough why you need to have your own wallet that's outside of the reach. This is no different than having cash in your hand versus your debit card and saying, oh, well, my debit card is just as good as money. Yeah, as long as they allow you to swipe it. So these are things that the community is really going to have to start to think of going forward here, because a lot of the carelessness that's been in the community over the last couple of years can really come back to haunt you, especially as crypto progresses and gets ready to go into this second cycle. The second and third cycle are going to be nothing like the first one. They're going to be much more aggressive. They're going to be watching a lot more closely, because at this time, I believe that we're probably going to hit, at the peak of the bull run, maybe 5 trillion or so. But certainly within the next decade, we're going to be looking at least a $10 trillion market. So we have those types of assets coming in, and that type of money flowing into crypto market. We already peaked at 3.3 trillion, right? It took, I think 12 years for, I think 10 or 12 years, if I remember correctly, for crypto to hit its first $1 trillion evaluation. We're talking about the totality of crypto. It took 18 months to hit $2 trillion, and about 7 months after that to hit $3 trillion. So they took note of that, and that is a serious threat to the monetary system. So that's why you're having these conversations here. And if they can do it in the name of like an FTX collapse, or look at the bankruptcies. We need to protect you by controlling the crypto and stuff like that. And it's just keep in mind, there's two sides to every story, and I'm not saying again that we do not need regulation. I'll never say that. I'm a firm believer that we do. Just keep in mind that it's not completely. I'm not saying they're lying, but I'm also saying that it's not completely what they're telling you. There's other things in there as well. If they primarily cared about protecting the consumers from getting screwed and stuff like that, I can give Gary Gensler personally a long list of things he can do in the stock market to prevent that. But we know that's not the angle here. So just keep that in mind. There's other things at play. So when you hear these things, you're going to be hearing a lot more from Charlie Munger, a lot of the people coming out that are going to be saying, do away with it. And you're also going to be hearing a lot from the SEC that's going to be weighing in with their opinions as far as what needs to be done to protect our interest and our money and stuff like that, because that's their number one priority. So just keep that in mind. And again, the number one thing that you can do as a consumer, as a crypto advocate, is to have your own wallet. And that could be up to your choice. There are plenty of options out there. Personally, I don't do anything that has attached to a brokerage, at least for my long-term positions. So if you're talking about like a Coinbase or Robinhood, personally, I wouldn't do that for my long-term positions. I would get you something that's a cold wallet. And again, I use Ledger. And if you need one, you can get one directly from the factory. I have a link in the description section for that. So you don't have to worry about any malware or scams and stuff like that. And I will say that too, because sometimes people get their ledgers or their storage devices off of eBay, or they go to Best Buy and stuff like that. Be careful about that, because people, even at Best Buy and all these places and stuff like that you can walk into, people can get things and return them. And like I said, there is a possibility that they can have spyware and malware and stuff like that on there, and you upload your crypto and you never see it again. So just be careful and making sure that, checking seals and all that kind of good stuff. I don't take any risk. That's why I got mine directly from Ledger, located in Paris. They send it out. It's packaged. You're the first person to touch it. No issues. And I don't want anyone. I know there's a lot of confusion in the last bull run. I don't want anyone, especially in this next bull run, the next cycle, to do everything right and then are in a position where they can't, realize their gains because, of a decision they made for where they're storing it. So, putting the accurate amount of money in, picking the right asset and stuff like that, those are already tough decisions to make. So if you've done everything right, just make sure you don't kind of trip yourself up at the finish line. Anyway, let me know your thoughts on this coming crypto regulation, the way they're wording it, Charlie Munger, all that good stuff. Let me know what your thoughts are in the comments. If you like anything I had to say, subscribe to the channel, share it with a friend as we close in on 50,000 subscribers. I appreciate all of you for this year, and I will see you in the next video.
That's right.